Okay, first of all, good time to buy?
Great time to buy, but I would be cautious when buying in Melbourne. Melbourne's had, before the GFC, 25% capital growth, during the GFC, 25% capital growth, and after 25% capital growth. That came from RP data, so with any kind of boom like that, there's going to be a correction, and then after that correction, you're looking at around about 7 years wait until the next boom. So if you're going to buy in Melbourne, make sure it's a bargain.
Okay, so where is good to buy at the moment?
Where is good to buy at the moment? Where we're buying is Sydney has been flat for the last 9 years, and also Perth has been flat for the last 6 years. Sydney, we're preferring to buy development sites with an existing house on it. Same within Perth. We like Perth because it's 20 minutes from the CBD where we're buying, and 10 minutes to one of the best beaches, and they're triplex sites. Sydney is about 35 minutes from the CBD, and they're duplex sites. We're buying for 350 grand and under.
What are some of the things that people should avoid? Should they avoid buying accommodation?
Okay. So what I'm trying to educate people here when I'm talking at the expos is I'm always looking for a better product to buy. I don't mind buying the units, townhouses, villas, apartments off the plans and house and land packages, and they're going to have to be a really, really good deal. My issue with that product is that you amputate 50% of future buyers when you go and buy that product, because developers won't turn up to your auction when you go to sell it because they can't develop it. So I always like to look at properties that I can add value to, that I can add rentals to, that I can add dwellings to, and that equals dollars in the long run.
Okay, so in that vein, houses over units?
Houses over units, and then I had someone today say to me, look Paul, land goes up in value, and I said, well, that's true. Land does go up in value, but development side land goes up faster, because you can do so much more with it. So if you have land that is only ever going to have one dwelling, well, that's going to make money, but it's not going to be the same if you can have 3 dwellings.
New or old?
I always prefer existing.
Great, why is that?
I just find that with the new stuff, one, you're restricted, you're amputating 50% of future buyers. Two, the land is too small, you can't add second or third or fourth dwellings to it. It's not even big enough in regards to land to put a granny flat on. And we're quite big with granny flats. The land size normally is around about 300 square metres, and in New South Wales you need to have 400 square metres. So I'm always looking for existing properties. Also too, sometimes when you're buying house and land packages or off the plans, they can be loaded. You have to be very careful with the guaranteed rent for 3 or 5 years. Someone's got to pay for that, and it's normally a loaded price. But just be mindful when you're looking at house and land packages or off the plans, be very cautious. If you're looking to buy in Melbourne, we're still buying in Melbourne, but it's going to have to be exceptional for us to get in. And they're really the key factors that we're looking at the moment.
Okay. Of the people you've spoken to at the expo, what are some of the biggest challenges buyers are facing at the moment?
I think everyone's scared of coming into GFC 2 again, and from some of the things that we're seeing finance-wise, it's always a very early indicator that things are not going so well. They tighten credit a little bit. So we've noticed that loans at 95% are getting declined a lot more often now. They're moving it back to 90% to get approved. We're finding construction loans are getting a little bit harder to do. They're still going through, but that was very similar indicators to the first GFC that we had. So it's just something that we're just watching at the moment. So they're a little bit concerned about GFC 2. But I've just said to them with my presentations today was that it's the best time to buy. When we had GFC, there was a lot of panic and a lot of people selling properties way under market value. I think it's going to happen again. So if you can position yourself to be ready to buy, that would be the best bet.
And during your presentations, what do you hope people will take away? What are some of the takeaways of your presentations?
Look, there's a couple of things that I want them to take away. The first one is cycle, what time of the cycle to buy. So again, while I love Melbourne, I've got 3 properties here that did really well. They went up in value from 135 to 310, they've dropped to 250. And that's just valuations that I've seen over a 2-year period. So the first thing is cycle, buying at the right time of the cycle. If you happen to buy in Melbourne now, there may be an indicator there that means you have to wait for capital growth for 5 to 7 years. That's boring. So if you can buy where it's been flat for a while and get very little downturn in regards to capital growth, that's got to be a better option if it's the same sort of demographics that you're looking at. So Sydney and Perth have been flat for a while. Not many people are saying Perth around here, but I seem to like Perth just for the zoning that we can buy. The RP data that we're showing in 2006 for these areas at 500,000, we're buying at 350. So I think it's a little bit of a sleeper, but those 2 areas, Sydney and Perth, is what I'll be looking at. So the first one is cycle, the second one is product. I really want to try and get across to people what the billionaires are doing, not so much the millionaires that are here, but the billionaires are buying big parcels of land and doing house and land packages, or they're going straight up and doing skyscrapers and doing units. So you don't see the billionaires and the BOW rich leads buying units or buying off the plans. And so what you see, they're buying these big development sites. So what I'm trying to get across as far as education to everyone here is that we should be looking on a smaller scale to what the billionaires are doing. So if we can buy a triplex site for 350 grand, that's 20 minutes from the CBD of Perth and 10 minutes to one of the best beaches, it's got to be a consideration because that's what the rich started off doing. And if you study the rich like what I have as far as the builders, they're the ones that actually started small doing duplexes and triplexes, and so we can copy what they did.
Great. I had someone say to me the other day that in an investment portfolio you should always have a section of it in blue chip. Do you think that's true?
You know, with the blue chip stuff, I actually don't mind it, but it should be stage 2. If you're going to be getting the Barbie dream houses, then it should be stage 2 in my opinion. So try and get as many cheap properties as you can that are self-sustaining, and also that might even be so much that they're actually paying more than what they should be, so it can fund some of the blue chip stuff. The thing with accountants and financial advisors, and we all love them, is that they put people into properties like in Leichhardt in New South Wales, $1 million property, rents out at $700 a week, you've got a shortfall of 30 grand. And they go, that's fantastic, negative gearing, fantastic. The problem is, if you said to them, can you go and pay my $30,000 shortfall, they're going to say, what are you talking about? But they expect us to do it. So I always like to have other properties that are going to go and fund those blue chip ones. So other properties first that are cheaper, then go and buy the blue chip.
Fantastic. Lastly, Property Secrets, what's in the pipeline?
Property Secrets, we're going very heavily into Sydney and also Perth. We've backed away a little bit with Melbourne. We're still buying in Melbourne, but it's got to be cheap. We're pushing the granny flats a lot, and we're also starting developing for our clients as well that don't want to wait, you know, till there's capital growth. They want to start building now. So it's all happening.
Absolutely. Great. That's everything. Thank you so much for that, Paul. Appreciate it. I will